It is one of the most awaited events for the markets, and it will be announced on Wednesday night. The US Federal Reserve will announce its interest rate decision on Wednesday night, and economists are expecting a 75 basis point hike by the US Federal Reserve this time around. And if this happens, it will be the biggest interest rate hike in the US since 1994. Now, if you look at the inflation print, the US inflation for the month of May surged to 8.6%, which is at a fresh 40-year high. Remember, in the month of April, we did see inflation cool off in the US, leading investors to believe that inflation may have peaked out, but that didn't happen, and we saw inflation remain elevated and come in at a scorching 8.6%. Now, in the wake of that, analysts believe that US Fed will turn even more aggressive and opt for a fairly big hike of 75 basis points. Now, in the aftermath of the US inflation print, we did see a sharp sell-off across global markets. In fact, the S&P 500 has slipped into the bear market territory. We saw a steep sell-off across various other asset classes, including Bitcoin, which got hammered out of shape, with Bitcoin slipping below the $21,000 mark for a brief period. In fact, as much as $200 billion have been wiped off from the cryptocurrency market since the weekend. If you look at the US yields, they have also been fairly elevated, with the 10-year Treasury yields jumping to 3.39%, and the 2-year Treasury yields in fact overshooting the 10-year Treasury yields for a brief period. Now, this phenomena is called the inversion of the yield curve, and this signals this signals the onset of a recession in the US. Now, when that happens, or when such a phenomenon happens, it means that investors are shunning short-term bonds and moving to long-term bonds, and it signifies a loss of confidence in the economy for the near term. And this is what had led to short-term Treasury yields overshooting the long-term Treasury yields. Now, the US Federal Reserve is expected to opt for steeper hikes in the wake of sharper than expected rise in US inflation. In fact, by September, the US Fed is expected to hike rates by as much as 175 basis points cumulatively. Investors were hoping for a pause in the September meeting, but that seems to be a distant dream for now. In fact, US inflation has become even more broad-based and more stubborn, because it has shifted from manufacturing to services, and in such a state it becomes even more difficult for the US central bank to keep inflation or to keep prices in check. So the biggest challenge that the Fed is facing this time around is to ensure a soft landing for the US economy, which is to tame inflation without causing a recession.